Oh, don't go there.
Okay, so hey, Bob, happy Masters weekend. It's also my birthday weekend.
Matt, happy birthday. What are you, 37?
Yes, 37.
Right on.
By some configuration.
37 is the new 38.
How about Webb Simpson -5 and Lee Westwood -5 through 9? Killing this course. Tiger Woods
down.
Tiger Woods right there.
Listen, this is the opening range. A lot can happen.
I'm just saying, -5. This looks like it's going to be a Tiger year. Remember when he won with like -20?
Lee Westwood, wasn't he in Tin Cup? How old is the guy?
He's old. He's definitely my age, 37-ish.
I gotta tell you, Masters weekend, generally one of my favorite weekends of the year, when it's not a fuck you COVID 2020-19 bullshit year.
Yes.
I am usually vying for the lead of the Biloxi Cup in Biloxi, Mississippi, or not, at Fallen Oak Country Club. Just an incredible track, man. And what a great clubhouse to hang out and watch the final round, the afternoon round of the Masters after you've already secured a Gulf Coast Cup trophy. I got to tell you, I mean, probably 2 decades been going down there in the spring for golf. So the Masters, a little different feel this year. We talked about light angle.
Well, even game day is going to be there on Saturday. The boys from ESPN, Herb Street, Lee Corso, and Desmond Howard, of course, they're all going to be there on the course doing their pregame.
Are you shitting me?
No, it's going to be awesome.
Wow.
So with that in mind, this is a good segue for us just to look at a couple golf stocks, just for shits and giggles. And of course, Callaway is one of the big golf manufacturers, and this stock had a little run up into the week before the Masters. As you can see, it ran from 15 up here to 19. Now it's pulling back. I'd buy it again down here at 15.
So back into the meat of there.
Yep, back into the meat, but also being rejected on the longer time frame from these upper bands, right? So it's you could probably pick it up here again, 1650. Nothing real sexy there. It's not a the interesting thing is golf had a huge golf did great during COVID this summer because it was about the only thing people could do across the world. I know here in Bend, most of the country clubs are jammed at full membership.
Absolutely.
After doing a couple local checks on, where the clubs were, we're at peak volume here. It's pretty crazy, but the clubs are full. Yeah. Again, as long as you could, as long as that 14, 13 level holds, this looks pretty solid. That would be an area for me, Bob, to look at. And then real quick, we can always look at Nike. Nike applies to every sports situation anytime. And again, Nike hit a new high on the Biden assumed election win. Assumed, I say, because nobody still has anointed him. But again, we
he's anointed himself, believe me.
Yeah, he self-anointed. By the way, you're the next president starting next week. I just decided you're going to be president HFR, and you should start having meetings with foreign dignitaries.
Thank you. Let's call General Flynn in on that and see. He's got experience doing this. Going.
So Nike is pretty. Nike's pretty extended, though.
A violation of federal law.
Right.
Anyway, I digress.
Anyway, we digress. It is weird watching the Masters without the blooming flowers, right? It's
the magnolias.
They're dying right now, which is hard to watch. Like it's kind of, we were talking about this before. The lighting is so flat. It's such a weird thing. The markets, by the way, aren't loving this. What do you want to jump off on today, Bob?
You know what? Let's I want to do a little teaching here, Matt. If you give me the opportunity to share.
Yep.
Hold on a second. I want to just talk. And we're in gold right now, but I want to jump because I did a segment into our private group on Meet MD. And I wanted to talk about time frame and fractaling, and how on the 3-day, which I was showing yesterday, how they completely respected that lower momentum level, right? Upward sloping, lower momentum. We got the Market Vitals envelope here, and it went and tested it and came right off of it, right? So in a true bear market, that level should have been taken out and not respected, in other words. And if you were truly going to paint the bear story, we should have got a close into lower momentum.
Right.
More importantly, though, for me, and I talked about, since hogs and cattle, they don't trade 24/7, basically. They're like an old school commodity market that has an open and a close, and it doesn't reopen until the next day. So I split up the hog and cattle markets into timeframes that aren't Fibonacci's, which I usually use, 55, 89, 144, and you can see on my chart here all the way out to 610. I split up the day to the 69, 138 would be half the day, so half of that 69 minute. What I want to point out here is this collar level on the opening here, and how well, when you look at this envelope, how well the market respects that standard deviation modeling, being the areas where if you are not taking profit, we have an old saying on the floor, Matt: bulls make money, bears make money, pigs get slaughtered.
Yeah.
And so you had an opening, you had a rip rally right up to the collar, right up to the 66.57, whatever that 66.57 was the high, a perfect touch into the collar. And you got to respect the power of that standard deviation modeling being, and for me, that just means don't be a pig. If you're in the direction, right, take some money off the table.
Yeah.
I just wanted to bring that up and point that out, that the envelope incredibly powerful.
We talked about that, even into the ACB, the Aurora cannabis the other day. We were long it and said, listen, the election's going to shoot this thing up. You should take some off as soon as it happened. It did. It basically doubled. Basically went from 7 or 8 all the way up to 14 overnight, and then it pulled all the way back, and we ended up buying it again down at 675 range. So, that's why you take profits, because then you can get back in without having, and you're still no worse off. And you can, let's say you just sold half of it. I mean, it would be a beautiful, you just doubled your position without even having to take on any additional risk.
Right on.
And basically all that, when you trade around a core position, and all that does is it lowers your, threshold and risk. Your entry becomes a lower number after you take those profits. So you're just, as you sell those and they pull back, you buy more, and that's better than buy and hold over the long term.
And I just wanted to jump back to the golf store at Callaway, and this is the weekly, and a couple of price points. So, Matt, I wasn't following this, but they must have had earnings or something, because they got smeared 3 weeks ago.
Yep,
right?
They must have, right?
But if you look at the following 2 weeks now, they gained some of it back, and they went and tested that low momentum level last week, couldn't get through it. This week they actually got through it, but they went right to that, to the average on this envelope, and have cratered back off of it, back in lower momentum on the weekly. For me, this is how I build. I build lower time frame to larger time frame, and vice versa. Actually looking at that longer time frame for more bias in my directionality anyway. So, if you're holding Callaway stock, this is my point. If you're holding Callaway stock and thinking that, well, that news was bad, but things are going to be better fundamentally long-term for this company, all I'm saying is, as long as they stay in the weekly below that 1788 lower momentum level, I don't know why you want to marry this story. That's all I'm saying.
Yeah. And again, I'm neither bullish nor bearish, but I agree. If you're bullish and 14 goes, you better have an exit strategy. I see the same thing on your chart, Bob, as I do on my profile. So 14's that level. And maybe you sell 19, buy 14, and play the ping pong in between until those ranges break. That's what I see also. So
right on, man.
Right on.
But
it might be a trader, tradable for you, but I don't know how much you can get into that.
Well, and again, we've talked about being a trader versus an investor, and for me, trading, two things is time horizon and capital deployed to a particular trade. In other words, you're much more of a trader when you don't have when you don't have the right capital application, and so you gotta you got to be active, because the risk profile when you're leveraged up is different than when you're not leveraged up.
Right.
And that goes to your capital base. The less capital base, by definition, whatever you trade, the more leveraged you are.
Yeah.
So just little tidbits of thought from
Hey, Bob, hey, bring up that chart. You reminded me of something, with the psilocybin, becoming legalized here in Oregon, that CMPS up there on top. Will you bring up that chart? I just want to look at it from your chart, and then.
All right. So here, not enough data, right? Hasn't been, let's go to the 610.
It's a new issue. Again, we talked about this, I think, when it came public, but this is a Compass Pathways. It's a British company that is really the only legal psilocybin company trading. But again, strong opening from 22 all the way up here to 44, got a home run double. And now looks like it's just kind of biding some time. Again, 22 to 44, we're right in the middle. So this might be an area where if you miss the IPO, didn't pick up shares, you're not buying the top, but you're not buying the bottom.
Right.
Again,
On.
It's hard to trade IPOs without history, as you just said. So this becomes more of a, as long as 30 holds, to me, it's probably all right. But
right on. So I got my low momentum on the daily, 32.87, pretty rock solid there.
Yeah.
A bunch of opens and closes there in this little area here, right around that same level, 32.87 being. And listen, I love the term line in the sand, right? Mostly because people say it and then they don't adhere to it, right? This is the line in the sand. You're grounded. Well, no, I'm not grounded because I know how to sneak out. Anyway, lines in the sand for me are important in trading. Like 32, if I had bought this thing for a longer term play, a close below 32.87 for me on the daily, I'm out. I can always get back in. Well, why be holding something that's I just keep.
Well, here, this is the conversation, right? Stocks go up, down, or they do nothing. Most of the time, most of them are doing nothing.
Exactly.
And during those times, you need to figure out when it breaks out of this band or when it finally moves here, how will I behave? Again, and I'll use this ACB because it's a recent example. We told everybody here at marketvitals.io when it was 14, we said, listen, this thing, you need to take profits. It's going to sell off again. And then sure enough, Monday, Tuesday this week, they announced a secondary. That to me is the capitulation news that I'm looking for on the sell-off, because the market already knew they were going to come public with the stock. That's why they ran it to 14. This happens all the time, and you can always look backwards and see it. Like, we didn't know it until it happens. But then it happens, that's the buy trigger, because then it comes right back to, your point there at $6.50 to $7 where it should hold. And I mean, again, in one day we go from 650 up to 8.25 yesterday. I don't know about you, but that's a great trade.
Right.
That is a great trade with low risk. You did your homework, you picked your areas. This is why you trade with limits also. And the other thing that we talked about, if you're not trending, then you can sell, you can sell collars, you can sell in the range that you're trading in. You can sell puts when we go down to the bottom, you can sell calls when we get up to the top, and manage that pretty low risk, knowing that if it breaks there, you get out.
Right on.
Either way.
Line in the sand.
Line in the sand. But the point is, there's upward trades, there's downward trades, right? And then there are trades that can be involved when the market's going nowhere. There is money to be made in all those situations. You need to ask yourself as a trader, which way is the market trending right now? Right now, that's the only thing that matters. It doesn't matter what it did before, and we can't predict what's going to happen tomorrow.
Absolutely.
All we can do is look at right where we are today. Don't have anxiety about the future, nor have depression about the past. Deal with the now as a trader, and you'll be much better off. And don't project whatever you think might happen into what the market, where it is. That's the difficulty.
My grandfather used to have a saying. It was wish in one hand and piss in the other, and see which one fills up first. And all these years later, very apropos when you're trading. All right. So maybe maybe don't even do that exercise. Just make sure you adhere to your lines in the sand. That's all I'm saying.
Yeah, exactly.
What else,
So,
Matt?
What else? Well, again, today's the first day of the Masters. It's pretty quiet out there. Take a look at the SPOOs real quick. Let's look at them. They're down low of the day here, trading 28. So, again, I'm pretty bearish. I told you that on Monday, that was probably the high for the market for the year and probably at least 6 months of next year.
Right on.
4 days later, I'm still right. I'm wrong if we trade over it and get a new high, but I think this thing is looking sketchy. I don't think whether this election stuff, again, we're in day 10, 9-10 after post-election. By the way, people, Al Gore did not concede his 2000 loss to President Bush until 47 days after the election.
47 for you for you arbitrageurs, hand signals. 40 on the head. 47 yours.
That's right.
Full.
So we're only in day 9 or 10. So this could drag out.
Day 9. Tomorrow's day 10.
Time.
The new moon is the 15th, by the way.
Which is also my birthday.
Matt, birthday boy pay attention to the new moon.
New moon on Sunday. New moon on Sunday.
There's an old trading journal.
Not to be confused with the old Duran Duran song, New Moon on Monday.
No. The new moon is on Sunday.
Right.
Sunday night opening could be very interesting.
New moon on Monday.
We need a full. Listen, you know what? I want to do a trading show like Letterman, man. We need a band. You know.
We do.
We need the band bringing stuff in.
We do.
You know, when we have nothing to say, we'll say.
I would prefer a marching band with a lot of horns, a lot of brass, and a lot of percussion. That's what I'm looking for when we have our band.
I got to tell you, man, I'm going to say no on the marching band because I think it'd be fun for about a week, and then I'd fucking break somebody's head open with a tuba. All right, back to the SPOOs though for a second here. Again, for me, I've hashtagged it. All right, hashtag that shit. We do Suds reviews, which is hashtag Suds reviews. I've also hashtagged Mind the Mo. The momentum level, all right, 35.32 for me today, 35.32 and a quarter to be exact. A close below there is no bueno, all right? That's just all there is to it. I look at standard deviation modeling, Matt. I know you're a huge baseball fan, right? And for me, this modeling, this ebbing and flowing of momentum and exhaustion that these standard deviation modeling gives you is similar to batters that are super. Let's say they're a lifetime 400 batter, but they're super streaky, right? So they go and they bat for over 3 weeks. They're batting 700, right? And then over another 3 weeks, they're batting 100, and they're averaging out 400 hitter. Well, you want to catch the guy on the streak for sure, right? And that's how I look at markets on a standard deviation modeling basis, similar to that hot hitter, man. Just keep the at-bats coming when he's hot.
Right? I played a game growing up. I've talked about it in many of the discussions and interviews I've had over the years, but Stratomatic Baseball was a great game for teaching me statistical analysis in games, right? It was a die-based, and still is. It's one of the greatest baseball games ever created. It's a board game, die-driven, based upon last year's, records. So if a guy hit 50 home runs, the dice would be set up. So on his offensive card, the 7, 8s, and 9s, 1, 2, 3 were the indicator. 7, 8s, and 9s, sometimes 10s were home runs if the guy was a big home run hitter, because those dice are the most rolled numbers. So I learned a lot about craps. I learned a lot about markets, not even knowingly, but when I was playing Stratomatic Baseball. And encourage your kids, by all means, Bob, to play games from Monopoly to Payday to Stratomatic Baseball, Stratego, that encourage them to think for themselves and think independently based upon facts.
Yeah, what's happening? What's happening actually on the ground? Risk.
Yes. Risk.
Give me that. Kamchatka. I want to take Kamchatka every time in Risk, right? Mostly because it took most of my life to figure out how to pronounce it.
Yeah, it was all about saying it, right? Well, that, and you were watching Rocky. Was it Rocky 3 or 4, where it's Ivan Drago? I will break you, Rocky. When we had the whole Cold War going on.
Right on.
Bitcoin, another shot over 16,000 today.
Another shot here, you know, and
doesn't
I
look
gotta
like
tell
there's
you,
a
I'm a
lot
little-
of follow through. There's not a lot of follow through
No,
for everybody
exactly,
that's
man.
saying this is going up.
I'm a little disappointed that there wasn't more oomph when they took it out.
I mean, what's crazy is your chart there is a week. Is that a weekly?
No, that's a daily. That's a daily.
But that's like, I call that like an inchworm market. That to me is not like when that inchworm breaks, and it will. This thing's going to fall. It'll probably erase kind of that October low from 10.5. I mean, we've gone up 50% here in a month, right? When your when your momentum level breaks, that thing's going to probably fall at least at 13,000 and probably could go even lower. I'm not even looking at a profile here on it, but it doesn't look good.
I'm back in. I nibbled back in, but believe me, I have lines in the sand for sure on Bitcoin. You know, I really like this chart, the 610 minute, and again, the collar is holding it, but you know, and I actually, you know, on a shorter term, I'm not going to be beholden to that momentum level, but here's the other nuance too, is like, what is the slope of these things? So if it tests lower levels, that's one thing. But if it tests, and again, we talk about the close all the time, the only way you change the slope of these things is to higher highs or lower lows, first of all. But the only way you do that is if you're closing down there. So that's one of the nuances. And, you know, and it is not exact science. None of it is, right? None of it is. So, but there are nuances that I pay attention to, and slope for sure is one of them.
Hey, pull up that oil chart real quick. Let's talk about that. Again, this has been seeing some bullish tendencies, little pullback from yesterday's high, or from, you know, a couple days, I guess, you know, Tuesday's high of 43.
Yeah, this is the 610. Let me go to the daily, because we've just re-entered that up momentum level.
But again, just in the same range. We're still, you got to get above 44 for any new pricing to come.
I agree with you 100%. Not only that, a completely shitty candle yesterday, right? Making new highs and then closing lower on the day.
Correct.
A lot of times we talk about, you know, well, what does that mean? Well, what it means that it trapped all the people that were long that thing. And if they took that position home, they're not feeling great. You know, right. They thought it was a breakout, and guess what? It was trying to be a breakout. Here's the weekly though. And you're right. I mean, this whole congestion now, 44 down to 33. And if you want to tighten it up a little, 36.
But the, you know, kind of the volatility looks like, you know, clearly over the last 6 weeks, 7 weeks has expanded. Okay. So that may be projecting a price discovery higher or lower, but until we see it on a close.
You know what, here, Matt, another thing that just jumps out at me huge is you talk about holes in the profile. And as we see, as that squeeze came in oil, and we had this huge gap lower on that, and when they went negative, this whole hole that they left here. Hey, guess what? We've just spent, you know, the better part of 3 months filling that hole. And
yeah, why don't you bring up let me bring up a profile chart. And
yeah.
See how that presents itself. That'd be good. Let me. So again, this is a 610 chart here, and you're not going to see the whole showing itself. Obviously, if we look at you know, you'll see it a little bit, but basically all we're doing is, to me, this is a very bearish chart long term, as long as we stay above or stable, you know, stable. Again, you stay below that 44, it doesn't have a big chance of going higher, to me. So it's above the point of control here for this chart for the last 6 months or so, 7-8 months, but it's teetering. Like, again, back below 38, you gotta be back on the short side. I'm not really long here until you get out above here and then come back and test. So I like to see breakouts, then come back and test where they break out.
Right on.
Because I don't need to like breakouts. Everybody knows, like, you know, anybody that's they think they're traders. I'm anti-momentum at the obvious points just because everybody knows them.
Right
So
on.
I have no problem with chasing them, but I want a pullback before I would re-enter. I want to see real closes a couple days above these levels before I would chase up or down. Otherwise, my premonition here is I want to be short unless we close over 44. So pretty low risk type of trade here that you can put on. So just something, I wanted to bring up CMG yesterday, and I forgot during our show. Just this prompted me seeing it in the alphabetized list. Folks, if you're trading this is a 5-minute chart, and this is a $1,300 stock down 35 today. I just want to point out how little it trades. Look at these. These are 5-minute bars.
Wow.
This thing just doesn't trade. So you better be spot on with your analysis if you're trading this stock and or you're trading the options. This is not something that amateurs pay attention to, but this thing doesn't trade. Look how illiquid it is. This is worse than some of the cryptos that you like to follow, Bob. What the heck? And I have burritos once a month at Chipotle. Everybody knows Chipotle, but I mean, look at the trading. It's so sporadic, so weird. It's weird.
Right on.
But look how it came right back to the point of control. So again, if you're paying attention here, folks, you sell 1307, you take a little heat yesterday up here to 1318. Well, guess what? Again, we talk about this all the time, Bob. You can't make money in trading unless you're comfortable in the discomfort of a position going against you, but not to the point of where your stop is. Big difference there, right? If your plan is I'm going to short at 1308 up to 1350, and I'm going to break, I'm going to be stopping out above any closes above 1350, that's our old high. If that's your plan, then selling 1308 and watching it go to 1318 is just part of the plan.
Right.
And guess what? Today at 1308, you're down $40. You made a nice little 3 or 4% trade if you're patient. You're not going to do that day trading. You sell yesterday, you buy today. That's why day trading for the same day usually doesn't work out, because stocks do this all the time. Right. They move to these points, they squeeze because they know the day traders got to get out. That's why it probably closed up near the high, and then they take it right down.
All right, Matt.
All right.
Another fantastic time chatting with the Prince of the Profile, Matt Davio. Listen, marketvitals.io, man, we just started this community. We want like-minded individuals in that. You are a trader that doesn't want to, another thing that I used to hear on the floor was, don't piss down my back and tell me it's raining. As a trader, I want your opinion. I don't want you to agree with me unless you agree with me. And that's mutual accountability that was so prevalent in the trading pit amongst traders, helping each other out, competing like cats and dogs for sure over trades. But an honest conversation was routine on the trading floor amongst traders about their thoughts and the reasons why they think the market, any particular market, was going to do something. That's what we're looking to build at marketvitals.io. So please come join the community, marketvitals.io, join. And if you want to get a finer detail, join one of our private groups covering various different asset classes. So please visit the site. Thank you. And thank you, Matt.
Thank you, Bobby. Take care.